Hello friends, Jeff Boxler here. Today we're going to dive into what a pre-qualification is, a pre-approval is, and a pre-underwrite is, and why they matter, and how they can help you in getting your offer accepted. So if you like this content, please share. Hit the subscribe button if you want more of this similar content. My goal is to make sure you are well informed, you have a great success as a homeowner, and this content is exactly drawn up to do that for you. So reach out, make comments if it's something or there's a topic that you'd really appreciate from me. I love it, and I'm happy to honor and respect and reply to those and speak to those. So that said, this is what a pre-qualification is, pre-approval, and a pre-underwrite. So pre-qualification, what that is when you fill out a loan application, it runs your credit, yet none of the information is cross-checked through actual documentation. It just gives you an automated response because all of us have a system called automated underwriting system. And what that is Fannie Mae or Freddie Mac for conforming loans, that is going to tell you, based on the information you put in the system, whether you are likely to qualify or not. That's a pre-qualification. A pre-approval is a step up. It is you filling out the application, your credit report is run, and you're uploading documentation for me to review, for instance. So I would look at your pay stubs. I would look at your W-2s. I'd look at your tax returns if that's required. I'd look at your bank statements, or we'd use our automated systems to be able to pull in your bank data, automated system to pull in your employment data. And that is reviewed by someone like myself that's a loan officer that has years of experience, that is able to then say, okay, based on the guidelines, based on what they put in the application, and based on what I'm seeing in regards to this documentation and verification of income, assets, etc., that you would actually qualify for the price point that you're looking for. The third layer is a pre-underwrite. And what a pre-underwrite is actually you filling out the application, you submitting the documentation, and then instead of a loan officer reviewing it versus the guidelines, an underwriter is reviewing it against the guidelines. The underwriter in the lending world is actually the referee. They're the one that look after the mortgage company or the bank that you're applying with to ensure that all loan applications coming through, all clients, and their income, asset, credit portfolio fits to the guidelines, and they're ultimately the one that says, yes, you are approved, yes, we will buy this loan, yes, we will fund this loan, this is good, a good bet for us, and it's adhering to the guidelines that we require. So having it reviewed by that referee, that underwriter, you are actually getting the best guarantee that your loan will be approved when comes time that you find a property and that you get going forward with that offer and getting the funds to buy that house. That said, none of these are 100% protection for you that once you're in contract that you're going to get the loan. And why is that the case? Because the property itself still needs to be reviewed by our underwriting team and be able to make sure that that property fits the guidelines that we require. If it's a condo, we need to make sure that the HOA fits the guidelines and how the condo is set up. So those are just a couple examples. There's many examples where things can and need to be checked once we have the address and the property, and we can run it back through underwriting to make sure those things are accurate. Equally so, if your credit changes, if your down payment ability changes, for instance, you have an emergency and have to spend quite a bit of your checking savings account, or if you have you miss a payment, your credit score drops, those things can impact you. So make sure you're keeping your savings where you were once you get pre-qualified, pre-approved, or pre-underwritten. You want to just make sure you're really looking after that, making sure you have auto pay set for all of your liabilities to make sure that doesn't ruin your credit from the time you get pre-approved, pre-underwritten, pre-qualified, to the time you actually get into the house, and making sure that nothing changes there. And then in regards to your job, if your job, you get paid more, well, that makes it only easier to qualify. If you're getting paid less or have to switch jobs, that might rattle things. So make sure you're communicating that with your loan officer ahead of time if you know it's coming, so they can update their numbers and make sure that you're still aligned with the goal that you're wanting to achieve, is buy a home or a condo at a certain price point. So hopefully this is really useful. I'd be happy to dive deeper into any of these concepts. Again, hit the like button, hit the subscribe button below. I'd be happy to keep sharing great content, and that's the way to do it. So have a great day. Bye.